Hello, I'm Cameron Mitchell and I'm going to provide a very brief overview of logistics operators' contracts and how they might relate to the provider's insurance program. You can find out more about me from my LinkedIn profile. You can also contact me through the LinkedIn profile if you'd like to find out more. First, a disclaimer: this material is intended as general comment only and does not constitute advice. You should seek advice from an appropriately qualified advisor in relation to your individual circumstances. What I'm providing here is really an overview, a way to look at the problem, not necessarily advice on how you should tackle these things for yourself, but a way to analyse it. And so I've presented one slide as a cost-benefit analysis. So one way you might deal with customers is on your standard terms and conditions that you've created and that you are hopefully expecting your customers to agree to. And the other end of the spectrum is the client insists on dealing with its contractors on its own terms on a contract that they have drafted, and there's a compromise position somewhere in the middle. So first, let's examine how this might impact on the logistics operator's insurance costs, and this is fairly simple. If it's on your standard terms and conditions, in general, the insurance costs will be lower. If on the client's terms and conditions, generally the insurance cost will be higher. This is because you'd expect the client to have reduced their risk on terms that they've drafted. And obviously then there's a continuum. You've got lower insurance cost for your standard terms, higher for client terms and conditions, and somewhere in the middle for compromise terms. The insurance I'm talking about is really your legal liability insurance, and it has many names depending on what you do. For a transport operator, it would be a carrier's liability policy. For a warehouse operator, it would be a public liability policy with a goods in custody extension or sublimit. And for a freight forwarder, it would be a freight forwarding liability policy. But these days there's actually a single policy that can combine all of those, because you find it's quite frequent for one company to do freight forwarding, warehousing, transport, etc., and that is known as a logistics operator's liability policy in the Australian market. Now let's look at the cost in terms of the actual legals, and as you'd expect, when a client's dealing with you on your standard terms and conditions, you have already drafted those with your lawyer, so it's a lower legal cost just to have them fall in line with that. But it's also a lower legal cost to simply take the client terms and conditions and agree to them. It's actually a higher legal cost to come to some compromise arrangement. Moving back to the insurance costs where you agree to the client terms, those higher costs may be quite clear and obvious. So you've gone to your insurer and said, Client ABC Proprietary Limited would like us to agree to their terms, and we'd like to extend our insurance as much as possible to include the liabilities from that contract. Now the insurer may go back and say very clearly, well, that'll be an extra $15,000 or whatever the number is, and they may also be quite explicit to say that, well, there are certain elements of this contract that won't be covered at all because they are too far beyond the scope of the policy and we're not prepared to extend for them, and both of those are really additional costs. And if you've taken a particular contract to the insurer and they've come back with that response, those costs are very clear, and then of course you can compare the cost of accepting the client's standard terms with the cost of drafting some compromise. It gets a bit more difficult because very often, or more often than not, those higher insurance costs are not explicit. One way you might be paying more for agreeing to client terms is that you may be cutting down your market of insurers to 8, for example, down to 3, because there's only 3 that are able to offer the extensions you require. It could be that the insurer just has an inherently higher price because more of your work is on non-standard terms and conditions. Underwriting and pricing insurance, yes, there's a rate book, yes, there's a set of guidelines. There's also a lot of license for the underwriter to make their own call, and it's far from an exact science. So you may find that these costs are not set out completely clearly. And so you find a lot of companies don't really explore these compromise terms because the bill from a lawyer setting out their drafting cost is in black and white and very, very clear, and the costs in terms of the insurance might be very unclear or hard to quantify, certainly not as obvious. There are some very useful ways to defray those higher legal costs. One way is for the insurer to offer a review of the client contract to identify things that might be driving the premium. They won't necessarily draft a compromise agreement for you. That's something that you should organise with a lawyer, but they can flag where you need to be looking. And most insurers, or certainly the ones that are active in the logistics market, will do this for no cost. Another way is to find out from your insurer or broker if they have a preferred pricing with a specialist law firm. Your insurance broker or your insurer may have negotiated a bigger deal or a larger deal with a law firm, and you can tack onto that deal and potentially get better rates on your legal work than you could if you just picked up the phone and called any lawyer. There's a couple of things you can explore. First of all, get an opinion on the contract from your insurer, and secondly, see if you can be pointed in the direction of a law firm that's cost effective for this sort of work, either because they're very, very familiar with it or because it's part of a larger deal which has been negotiated with your broker or your insurance company.